Hello, if you're new to the channel, welcome. In this video we will talk about the shares of the company Meta Platforms. To do this we will analyze various parameters of the company, and finally try to reach an approximate value to the fair value of the stock, and compare it to the current price. Let's analyze the following parameters: growth, dividends, debt, profit, number of shares outstanding, and finally the price. But first let's get into a brief introduction to the company. Surely anyone who has never heard of Facebook, or now titled by Meta Platforms, lives from under a rock. Owner not only of the social network Facebook, but also Instagram and WhatsApp, it is a giant business that operates in the service and communication sector. Growth. Facebook has on average seen earnings per share growth of 30% per year over the past 5 years. Revenue rose from $20 billion in 2016 to $117 billion in 2021, and increased on average 40% per year in the same period. Net income increased from $10 billion to $40 billion in the same period. Finally, free cash flow has increased from $15 billion to $40 billion in the last 5 years, making an average of $25 million a year. Dividends. This stock pays no dividends. Debt. Total assets are $165 billion and total liabilities are $41 billion. Current assets are $66 billion, and current liabilities are $21 billion. If we divide the total debt of the company, on the average free cash flow of the last 5 years, the $25 billion that we calculated earlier, we see that the company can pay all its debt in less than 2 years, only with what it generates in cash. These figures translate into a healthy and under-indebted company that is likely to be able to live up to its obligations without major difficulties. Profit. Facebook, in the last 5 years, has always posted profits, and has a return on investment of 27%. Gross profit margins and net are 80% and 33% respectively. Number of shares in circulation. Outstanding shares fell from 2.85 billion in 2018 to 2.74 billion in 2021, representing an average of -1%. Price. Currently the company has a market capitalization of $570 billion. The current earnings per share is 13.8. Dividing the current share price by this value we have a price on profit of 15. Finally, to get an idea of the fair value of the company we can divide the total price of the company by the average free cash flow of the last 5 years, which gives us an approximate multiple of 22 times. Given that this multiple less than 3 months ago was double and the company continues to make almost the same, now costing half of what it cost in the last quarter, we can ask ourselves if there is an opportunity here. But what is the fair value of the stock? Well, this value varies depending on what we believe the company will do in the future. If we believe that in the next 10 years revenue will increase between 5 and 10%, that the net profit margin will remain 33%, and that the company is priced at a price/profit of 15x. If we want to have a 12.5% return on our money, then the fair value of this share will be between $200 and $300. Why a 12.5% return? Given that we can invest in an ETF of SP 500 and have a return of approximately 10% per year, then since we will have the additional work of investing in private stocks, we better have a higher return than the market. Conclusion. In short, Facebook presents itself as a very profitable company, with high growth and little indebted. Despite not distributing the profits through dividends, it has a high return on retained money. Currently the shareholders are quite scared in relation to the changes in the company, and with the investments made for the metaverse. The decrease in users from last quarter to the current quarter was also something that displeased many investors. In my view, the main question we should ask ourselves is whether the current news really justifies the price fall that occurred, or whether it is exaggerated. As the old man says, we should be fearful when others are greedy, and be greedy when others are fearful. I hope you enjoyed this brief and simplistic analysis. The numbers used are rounded values, and the opinions given are just my personal perspective. It is not a recommendation. Leave suggestions for actions you'd like to see in upcoming videos. Thanks for watching and good business.